Hi traders, it's Roberto for FX Northwest, and this is the tutorial for what is called the top-down analysis. It's what the trade signals that are sent out, for those of you that subscribe to FX Northwest trade signals. This is how trade signals are generated. We're looking at pound yen daily chart. Notice these two lines, one is a 20 moving average line, simple moving average line, the other one is a 200. And I'm looking at a daily chart. So every day I'm looking for trends, looking to where the market or specific currencies, what direction the market, the overall direction of the market, I should say. So if I look at a daily chart, I notice that back in, I think it was May the 13th, a major support level on pound yen was broken. Notice there were several support levels at 143.80 area, and finally it broke that level of support. So this period from back in February till May pretty much was over. We're in a downtrend. The market was, notice that the 200 moving average line was flat, indicating no clear direction. That all changed in May, and I think a lot of it had to do with trade war with China. Two lines of moving average lines have crossed to the downside. Notice that here 200 or the 20 crossed the 200 moving line, so that confirmed the downtrend. The other indicator is MACD indicator. The two lines of MACD are angled and separated below the zero line. That's very important. So I'm looking for several factors, several things to line up to give me an indication where the market will most likely go, what direction in the future. Then the next thing I do is I'll switch to the 4-hour chart and see that, in fact, on the 4-hour chart, the 200 and the 220 moving average line are slanted to the downside. That's my other indicator on the 4-hour chart. So I look at 3 time frames to help me with directional bias. I use the 1-hour chart for entries. So let me make this smaller so you can, okay. So we know that the pound yen is in a downtrend, and notice when the pound yen rallies, it just turns around and heads south again. Anytime it rallies, it just turns around and heads south. The reason being is that the daily chart, the 4-hour chart, we're in a strong downtrend. Okay, so the entry on the signal went out last, I believe, on Monday to sell the pound yen, targeting 138 area. Right now is at 138.91. And we took this trade, let me switch over to the 4-hour chart again, last, what, in the 7th, I think? So this thing shot down quite a bit from the beginning of the week, okay, about 700 pips. So if you would have taken this trade when the two lines, 20 and the 200 moving average lines crossed, so it's like a rainbow pattern. Notice how the two lines just cross to the downside, and price stayed below the 20 moving average line. And on MACD, two lines of MACD are below the zero line. That's very important. You need several things to line up on different time frames. Also notice we have a breakout to the downside on a 4-hour chart after about 2 days of consolidation. Finally, this candle broke below the support, a nice bearish engulfing candle, and it continued to sell off till today, which is Friday. Okay. So I'm going to show a few more currency pairs just to see what happens when things line up. This is the Canadian yen and the signal went out, I think on Monday or last Friday, I believe. Again, when we have, this is a daily chart, price is below the 200 moving average line, and when you see price above or below, that's an indicator on a daily chart what direction is going. What is the directional bias of a currency pair? Notice that it's weaving in and out on the 20 moving average line. So you want to wait till price breaks below the 20 moving average line to enter a short position. And we took this trade up here when it was bouncing off the 20 moving average line on the daily chart. That was the entry. Okay, so I scroll down to the 4-hour chart and notice that again, two lines, the 20 and the 200 moving average line, are slanted down, so price is below, moving in and out of the 20 moving average line. But then we saw this bearish engulfing candle, and that's the third thing that I look for. Directional bias using 220 moving average line. The two lines on MACD crossing to the downside. That was the second thing I saw right there. Notice two lines on a 4-hour chart. Bearish engulfing candle. So this retracement is essentially over. And we want to trade in the direction of the daily chart. So let's switch over to the daily chart again. So looking at a daily chart, we're clearly in a downtrend based on the 200 and the 20 moving average line. Okay, and MACD, the two lines of MACD are below the zero line. So that's how you can tell if the market's in a downtrend. Okay, so let me switch over to the 4-hour chart again. Bearish engulfing candle, that was on the 22nd, and that was essentially my signal that this rally to the upside is over and it's time to short. And this thing, it broke, our target was 81.50 and it went all the way down to 81.15. Here's another trade signal that went out a few days ago, but it has not broken that 88.50 level. That would be our entry, and our target is 89.30. But notice again, this is a 4-hour chart, two lines, a 220 moving average on it's across to the upside. So we're in an uptrend. Switch over to the daily chart, and price was in a downtrend, but now price has broken above the 200 moving average line. So technically right now we're in an uptrend, even though the two lines have not crossed to the upside. Price has broken above the 200 moving average line, and we're targeting that 89.30. Here is the pound USD. Notice that here there's two lines broke, 20 and the 200 moving line, average line has crossed, and we're in a downtrend on pound dollar. However, we have a nice morning star, which and stochastics is oversold, so we should see on Monday this should rally up to 128, 129 level, or at least till the swing point, that support level is now resistance. So if you were to take a trade, this would be a great time to take it on Sunday night when the markets open up and target that resistance level that used to be support. Okay, but again, market was in a strong downtrend on a daily chart. Okay, we switch over to the 4-hour chart. Here's a nice bearish candle, two lines, 200 and the 20 moving average line are slanted to the downside. MACD is below the zero line, so we're in a downtrend technically. And then that continued from Thursday, followed through Friday, but now it's finding support at 126. On a daily chart, again, let's switch over to daily, and we see a nice morning star, which basically tells us that this 125.95 level is going to be very difficult to break. and we should see some retracement. Okay, that's it for this tutorial. If you are not signed up for our trade signals, just go to our website at fx-northwest.com and sign up. Have a good weekend. Thanks for watching.